World stock markets have staged their biggest sell-off to start the year in history. Now it's time to hear from the central banks. Now, the European Central Bank hinted last week that there's stimulus to come. We'll soon hear from the Federal Reserve and then from the Bank of Japan, here behind me, which it's easy to forget has been stimulating more aggressively than anybody else for the last few years. Its balance sheet is now worth roughly 3/4 of Japanese GDP. Now, the falling equity prices, the rising yen and the falling oil price, which pushes down on inflation, have changed the calculation for the Bank of Japan. A few weeks ago, nobody thought they would be announcing anything this month. Now, the pundits aren't so sure.
I don't think that the BOJ is actually going to move. I think that things are broadly where Kuroda would like it to be. In other words, if you strip out oil, then we've got about 1.3% worth of inflation at the moment. That's not a bad place to be.
There's not been enough fundamental change to their story on the domestic economy to make me think that they really want to move now. But there's a strong case for further easing in general.
I think that the Bank of Japan is going to ease again. There is an inherent promise and an inherent commitment that the Bank of Japan will do whatever it takes to achieve its targets as early as possible.
But people do seem to agree that it's only a matter of timing. Easing is coming.
Well, I do not expect Mr. Kuroda to take a major action next week. He might do that in the second half of this year. Since in 2017 there will be the lays of the consumption tax.
The January would be the chance to be introduced further more easing, but according to my guess, it would be the 50-50 chance.
Now, there's passionate disagreements about whether the BOJ's monetary policy, which is the first arrow of the so-called Abenomics plan to revive the economy, has actually worked. Markets were very excited about it when it started 3 years ago. More recently, there's been some disillusionment.
I think that's being a little bit unfair. The first part of it was monetary policy, which I think has been conducted extremely well. I am frustrated that the government or the Ministry of Finance has tightened up on the fiscal side. That could have been a lot better, and I am worried about the consumption tax hike. The rest of it is supply side economics, and we know that takes time.
Well, I think they should have already moved. I think they're now well behind the curve. It was clear last October, even on the story they were telling, which is a story about inflation expectations, that inflation expectations have been starting to weaken.
It has led to the depreciation of the currency to a significant degree, and it has led to particularly the rise of the equity prices. Equity prices has risen as much as 50%, 60%.
The promise of Abenomics was that all policy levers, fiscal policy and monetary and regulatory policy, were going to move together. There is no question that over the last 3 or 4 months, the commitment, seems to have slacked a little bit.
Now, the big problem for the BOJ is that the markets mess with their plans. Falling oil prices means a return to deflation. Safe haven buying means the yen is at its strongest against the dollar in a year, even if it's still far weaker than it was when Abe came to power. Many now think that new and more imaginative policies are needed to calm the markets.
Adding to quantitative ease, raising the balance sheet growth target from the current 80 trillion to 100 trillion yen is a first step. In my personal opinion, I think it would be fantastic to actually add an additional policy tool by actually introducing negative interest rates here in Japan, following the lead from the ECB.
In the very calm condition of the market, the BOJ purchased the government bond. On the other hand, in the turbulent monetary conditions, the BOJ purchased the ETF or the REITs, some risk asset, such a flexible purchasing box would be the very good message to the market participant that the BOJ has an intention to calm down the market.
And that's the central issue. The BOJ, like every other central bank, would like to calm the markets. But with oil prices falling and big investors making redemptions, the question is whether they can.